Hi viewers, 11th standard accountancy, chapter 13, exercise sum number 17. From the following information, prepare trading and profit and loss account and balance sheet in the books of Sangeeta for the year ending 31st March 2018. First, we have to identify the given information. Capital goes to liability side, bills receivable asset side, bills payable liability side, purchases goes to trading account debit side, sales goes to trading account, opening stock goes to trading account, drawings goes to liability side, salaries goes to profit and loss account, established expenses profit and loss account, advertisement profit and loss account, furniture goes to asset side, cash at bank goes to asset side, miscellaneous receipt means credit side of the profit and loss account. And some apart from the box they have given some adjustment. Stock 31st March means closing stock goes to trading and asset side of the balance sheet. Okay, so all the adjustment will appear on two places in the final accounts. So as for the format, income tax of Sangeeta paid. Income tax means it shows on liability side and asset side. Okay, so provide interest on capital. So interest taken for providing capital, contributing capital 10% means it's a on business point of view. Interest taken interest means it's a indirect expenses goes to profit and loss account and liability side. Provide managerial remuneration 10% of net profit before charging such a commission. Okay, so let's see then what we have to do. We are going to prepare the final account, that means trading profit and loss account and the balance sheet. Okay, so as per the instruction, as per the format, we are going to start with the trading account. On debit side always started with the opening stock. After opening stock purchase, we have to enter purchases account, and credit side we have as usual we enter the sales and the closing stock. So then the credit side we have the higher amount, that is total is 1,09,200. So for the debit side we have the gross profit 22,200. We have to transfer the gross profit into the profit and loss account. Credit side 22,200, and salaries, establishment expenses, advertisement as usual we have to post it on debit side of the profit and loss account, all the expenses, and credit side the indirect income, that means miscellaneous receipt 600 entered. Then interest on capital, listen here. Capital, how much is capital? 20,000. For 20,000, 10% interest means provide capital how much rupees? 20,000. For 20,000 we taken 10% interest. Okay, so 10% means we taken 2,000 rupees interest on capital for providing capital. So 2,000 rupees interest on capital is the expenses for the business. Okay, we entered it on debit side of the profit and loss account. Then credit side we have the higher value, that is 22,800. We consider it as the total, so we get total on credit side. As per the format, we have a net profit on debit side, that is 6,000. Listen, apart from the manager's commission we have to add 6,600, 4,500, 2,300 and 2,000. We have to sum up these four amounts and subtracted with 22,800. Finally we get 7,400 rupees. Okay, listen what they have asked. We have to find out to provide managerial remuneration means manager's commission 10% of net profit before charging such commission. So before charging such commission means we have to find out the manager's commission before charging means net profit before charging commission into rate of commission into 100. So net profit before charging commission means 7,400. rate of interest they have given 10% means 10 by 100 as per the format. Okay, then we have to cancel it. We will get 740 rupees. So 740 rupees is the manager's commission, right? So after subtracted including 740 from 22,800, we will get the net profit 6,660. Okay, so the net profit of the profit and loss account is 6,660. We have to transfer that net profit into the capital account of the balance sheet. Okay, so we prepared trading and profit and loss account. Now we are going to prepare the balance sheet. Let's go for liability side. Always started with the capital. As per the format, we always started with capital 20,000. Then with capital we have to add net profit. We will get 26,660. From that amount we have to add interest on capital 10% means 2,000 rupees. After added we will get 28,660 rupees. Then we have to subtract income tax 800 rupees. We will get 27,860. Then we have to subtract the drawing 4,500. Finally we get 23,360 rupees. Then bills payable, manager's commission as per the instruction, as per the format we enter on liability side. Then let's go for asset side. So listen, cash at bank 3,200 rupees. We have to subtract income tax 800 rupees from cash at bank. Listen, each and every adjustment will be appear on two places in the final accounts, right? As per the format, interest on income tax is appears on liability side. We have to subtract income tax from capital on liability side, and on asset side we have to subtract income tax from cash at bank. Okay, because the income tax taken from your bank account, so we have to subtract income tax from cash at bank, not cash in hand. Okay, so cash at bank you have to subtract income tax. So income tax appears liability side and asset side, two places in the final accounts. As usual we have to, as per the format, bills receivable, furniture, closing stock we entered on asset side. So we entered the given information in the respective places. Okay, finally we get the total, same total on equal amount on both asset and liability side, that is 34,600 rupees. Do you have any doubt? Please comment it on the comment box. Thank you. Take care.